Canada terminates energy exports to the United States, triggering widespread disruptions. For years, Canada has been a cornerstone of the United States' energy supply chain, reliably delivering vast amounts of oil, natural gas, and electricity across the border. However, in a stunning turn of events, Canada has abruptly severed this lifeline by halting its $13 billion oil export pipeline and ceasing all energy shipments to its southern neighbor. This decision has left the U.S. government reeling, caught off guard, and unable to mount an effective response in time to mitigate the fallout. Historically, Canada has been the largest single source of energy for the U.S., making this move a seismic shift with immediate and far-reaching consequences. Almost overnight, the cessation of these exports has driven up prices for gasoline, oil, and electricity across American cities and towns, sending shockwaves through households and businesses alike. The ripple effects are profound. Millions of Americans now face unprecedented disruptions as the cost of essential goods, like fuel for cars, heating for homes, and power for daily life, skyrockets. States heavily reliant on Canadian hydroelectric power, such as New York, California, and Michigan, are bracing for potential rolling blackouts, especially as winter looms on the horizon. The sudden scarcity has left the U.S. energy grid vulnerable, exposing its dependence on its northern partner. From daily commutes to air travel, no sector remains untouched. Fuel costs for airlines are climbing, while industries tied to affordable energy struggle to adapt. This bold Canadian maneuver has not only upended the status quo, but also raised urgent questions about how the United States will navigate this new reality of scarcity and soaring costs, with families and businesses left to bear the burden of an escalating energy crisis. Motives behind Canada's bold energy pivot. The abrupt halt of Canada's energy exports to the United States didn't happen in a vacuum. It's the culmination of years of mounting tensions fueled by American trade policies. For a long time, the U.S. has leaned on its economic dominance, slapping steep tariffs on Canadian products like steel, lumber, and auto parts, confident that its northern neighbor wouldn't dare push back. These tariffs, designed to protect American industries, squeezed Canada's economy, hitting its exporters hard and stoking frustration in Ottawa. Canadian leaders had repeatedly cautioned that such measures could backfire, hinting at retaliatory steps if the pressure didn't ease. Yet, Washington largely dismissed these warnings, assuming Canada's reliance on U.S. markets would keep it in line. That assumption has now crumbled spectacularly. Fed up with being strong-armed, Canada has taken decisive action, not just cutting off oil, gas, and electricity to the U.S., but also forging lucrative, long-term energy pacts with global heavyweights like China and India, two of the planet's biggest energy consumers. This isn't merely a tit-for-tat reaction. It's a calculated economic strategy to diversify Canada's trade partners and loosen the U.S. grip on its energy sector. By redirecting its resources to Asia and Europe, Canada is positioning itself as a key player in the global energy game, reducing its dependence on a single, unpredictable market. The shift exposes the fragility of U.S. confidence and signals a broader intent. Canada is done playing second fiddle. As pipelines and ports once aimed at the U.S. now turn toward new horizons, this move challenges the long-standing North American economic dynamic, leaving the U.S. to grapple with the consequences of its own tariff-heavy approach, while Canada charts a more independent course. Economic fallout rocks the U.S. as Canada's energy cutoff bites deep. The sudden loss of Canada's oil, gas, and electricity has plunged the United States into an energy crisis that's shaking the nation to its core. With Canada historically supplying a massive chunk of America's energy needs, its decision to pull the plug has unleashed a cascade of consequences that are hitting hard and fast. Gasoline prices are climbing, forcing drivers to dig deeper into their wallets just to keep their cars on the road. Electricity bills are spiking, leaving households scrambling to cover the cost of keeping the lights on. The ripple effect is brutal. Industries that depend on cheap, reliable energy are taking a beating, from airlines facing steeper fuel costs to factories cutting back on production to stay afloat. In states like New York, California, and Michigan, where Canadian hydroelectric power once flowed steadily, the threat of rolling blackouts looms large, especially as colder months approach and demand surges. Beyond the immediate price shocks, the broader economy is feeling the strain. Steel plants, car manufacturers, and food processors are slashing output, putting tens of thousands of jobs at risk and dimming profit margins. Some businesses are even shuttering facilities, unable to cope with the soaring energy expenses. Inflation is surging too, as the cost of goods, from groceries to plane tickets, jumps, piling pressure on families already stretched thin. This isn't just a temporary glitch. It's being dubbed an energy winter that could linger, exposing how deeply the U.S. leaned on its northern neighbor. With supply chains disrupted and no quick fix in sight, Washington's attempts to stabilize the situation look increasingly desperate. The crisis is reshaping daily life for millions, raising tough questions about resilience and whether the U.S. can weather this storm without buckling under the weight of its own energy dependence. Global energy landscape shifts as Canada turns to new allies. Canada's decision to cut off energy exports to the United States isn't just a blow to its southern neighbor. It's a game changer for the world's energy map. With the U.S. sidelined, Canada has wasted no time pivoting to other powerhouses, striking billion-dollar deals to supply oil, gas, and electricity to Europe, China, and India. These aren't short-term fixes but strategic alliances aimed at reshaping Canada's role on the global stage. Europe, desperate to wean itself off Russian energy amid ongoing tensions, sees Canada as a reliable lifeline, eagerly snapping up contracts to secure a steady flow of resources. Meanwhile, China and India, two of the planet's hungriest energy markets, are locking in long-term agreements to fuel their booming economies, ensuring they won't be left in the lurch as demand soars. Canada's export infrastructure, once laser-focused on feeding the U.S., is now being retooled to serve these new partners, with pipelines and ports redirecting their streams toward Asia and the Atlantic. This shift isn't just about economics. It's a power play that's tilting the global energy balance away from North American dominance. The U.S., once a linchpin in this equation, now finds itself on the outside looking in, its influence waning as other regions step up. For Europe, Canada's move offers a chance to diversify and stabilize its energy grid, while Asia's giants gain a dependable supplier to power their growth. The implications are stark. Canada's bold realignment is carving out a new pecking order, positioning it as a go-to energy broker for the world's major players. As these ties deepen, the U.S. faces not just a supply crunch but a loss of geopolitical clout, watching helplessly as its former partner rewrites the rules of the energy game and leaves it scrambling to catch up. U.S.-Canada trade war escalates under Carney's leadership. The fallout between the United States and Canada has ignited a full-blown trade war, with Canada's new Prime Minister, Mark Carney, refusing to back down from American pressure. For decades, the U.S. has held sway over Canada's economy, absorbing over 70% of its exports, and wielding that leverage with heavy-handed tariffs on goods like steel, lumber, and agricultural products. Under Donald Trump's aggressive policies, these measures intensified, hitting Canada with a punishing 25% levy aimed at bending its neighbor to Washington's will. But Carney, a seasoned economist with a track record of steering nations through financial storms, isn't playing defense. Instead, he's striking back with a bold counteroffensive, slapping tariffs on U.S. imports, ramping up domestic production to replace American goods, and pouring investment into renewable energy to challenge U.S. oil dominance. Beyond tit-for-tat, Carney is forging new trade alliances with the European Union and BRICS nations, Brazil, Russia, India, China, and South Africa, to wean Canada off its reliance on the U.S. market. His vision goes even further, targeting the heart of American economic power, the U.S. dollar. Carney has long criticized the world's dependence on the dollar, arguing it leaves nations vulnerable to Federal Reserve whims. Now, he's pushing for a digital, central bank-backed currency to rival it, a move that could erode America's financial edge if it gains traction. This isn't just about trade. It's a battle for Canada's economic independence, with Carney betting big on a future where the U.S. no longer calls the shots. Markets are jittery, investors are on edge, and Trump's administration is rattled by this calculated defiance. If Carney pulls it off, Canada could break free, setting a precedent that might inspire others to follow, threatening America's grip on North America's economic destiny. Defense tensions rise as Europe and Canada pivot away from U.S. influence. The cracks in America's alliances are widening, not just over trade but in the critical realm of defense, as Europe and Canada rethink their reliance on the United States. Europe is rolling out an ambitious €800 billion Readiness 2030 program, a massive push to bolster its military independence and explicitly sidelining the U.S. and even the UK from future plans. This shift stems from growing unease about American weapons, fueled by whispers of kill switches, hidden mechanisms that could let Washington remotely disable or cripple equipment sold to allies. Figures like Denmark's Rasmus Jaf have sounded the alarm, warning that buying U.S. arms could leave nations vulnerable to American coercion, especially under Trump's unpredictable leadership. Trump himself has fanned the flames, openly admitting he'd sell allies toned-down versions of weapons, reduced by 10% in power, to guard against future betrayals. That candor has backfired. Countries like Canada, Portugal, and France are now reconsidering big-ticket purchases like the F-35 jet, turning instead to European or Australian alternatives. Canada's doubling down, striking a $6 billion deal with Australia to develop cutting-edge radar systems, a clear signal it's seeking partners beyond the U.S. Meanwhile, Europe's leaders, like Ursula von der Leyen, are framing this as a historic pivot. The EU is building a self-reliant defense force, ready to stand alone if America falters as a partner. The distrust runs deep. Concerns linger that the U.S. could weaponize its allies' dependence, from cutting spare parts to strong-arming concessions like control over Greenland. As Canada and Europe forge these new paths, the U.S. faces a stark reality. Its once unquestioned dominance in defense ties is eroding, leaving it isolated as allies prioritize sovereignty and security over loyalty to Washington. Global pushback mounts against U.S. under Trump's divisive leadership. The Trump administration's brash tactics have sparked a worldwide backlash, uniting nations in a fierce defense of their autonomy against American overreach. From tariffs to territorial threats, Trump's policies have alienated even the closest allies, driving a wedge between the U.S. and the global community. Canada, under Mark Carney, is digging in, rejecting U.S. economic dominance and vowing never to be absorbed into America's orbit, a stance echoed across its political spectrum. Mexico, led by President Claudia Sheinbaum, is riding a wave of 85% public approval as she stands firm against foreign pressures, with 35,000 citizens recently rallying in the streets to assert their nation's independence. Across the Atlantic, Europe's leaders, from France to Germany, are forging a united front, not just resisting U.S. policies but partnering with others to build a fairer global order. Ukraine, too, shines as a beacon of resilience, with President Volodymyr Zelensky rallying 70% domestic support to defy external threats, bolstered by growing international solidarity. Even tiny Greenland has rebuffed Trump's audacious bid to claim it, with locals and Denmark fiercely guarding their 600-year heritage. This isn't random defiance, it's a collective awakening. Trump's moves, like imposing harsh trade penalties or dangling provocative deals, have eroded his credibility, painting the U.S. as an unreliable partner. Nations big and small are now charting their own courses, less swayed by Washington's unilateral flexing. The administration's isolation is stark. Never before has a U.S. leader faced such a cohesive global rejection. As countries from Mexico to Canada to Ukraine double down on sovereignty, the world is tilting toward cooperation and equality, leaving Trump, America, on the sidelines, grappling with the fallout of its own confrontational stance. Can the U.S. weather the loss of Canada's energy lifeline? The United States is staring down a daunting challenge, replacing the massive energy imports it once took for granted from Canada. With Canada supplying 67% of U.S. oil imports, some 4 million barrels daily, and nearly 40 terawatt-hours of electricity yearly, the sudden cutoff has exposed a gaping vulnerability. States like New York, Michigan, and Minnesota, which leaned heavily on Canadian hydropower, now face the specter of power shortages, especially during peak summer and winter demand. Oil's even trickier. Many U.S. refineries are built to process Canada's thick, heavy crude, and shifting to lighter blends from places like Venezuela or the Middle East isn't a quick flip of a switch. Sure, the U.S. boasts hefty domestic reserves, but ramping up production means time, money, and new infrastructure, none of which materialize overnight. Natural gas, vital for heating homes and powering factories in the Midwest and Northeast, adds another layer of complexity, deeply tied to Canada's cross-border pipelines. The grid itself is a tangle of interdependence. Losing Canada's steady juice could destabilize entire regions. Could the U.S. shop elsewhere? In theory, yes, Middle Eastern oil or European electricity might fill gaps, but the price tag would soar, hammering businesses and households already reeling from inflation. The ripple effects are grim. Higher costs for everything from factory output to grocery bills, with no easy workaround. Domestic production could eventually pick up slack, but the lag leaves the U.S. exposed. Negotiations might be the only lifeline, yet pride and politics could stall a deal. This isn't just a hiccup, it's a potential long-term shock, testing whether the U.S. can adapt fast enough or if it's doomed to stumble through an energy-starved future, scrambling for solutions as Canada looks elsewhere. A new global order emerges amid U.S. isolation. The saga of Canada's energy cutoff and the ensuing global realignment paints a stark picture. The United States, long a titan of economic and geopolitical might, is teetering on the edge of irrelevance. What began as a trade spat with Canada, fueled by Trump's tariffs and bravado, has snowballed into a crisis that's exposed America's Achilles heel, its reliance on a neighbor it took for granted. As gas pumps run dry, lights flicker, and factories stutter, the U.S. faces an energy abyss with no quick escape, its refineries and grids ill-equipped for a world without Canada's resources. Beyond its borders, the fallout is reshaping alliances. Canada, under Mark Carney's steely resolve, is rewriting its destiny, funneling oil and power to China, India, and a Europe eager to ditch Russian dependence. This isn't just a snub. It's a blueprint for others to follow, with nations like Mexico and Ukraine flexing their own sovereignty against U.S. pressure. Europe's €800 billion defense pivot and Canada's Australian radar-packed signal a broader shift. Allies are done betting on an America that might hobble their weapons or dictate their fates. Trump's gambits, tariffs, Greenland threats, toned-down arms, have backfired, eroding trust and leaving the U.S. isolated as never before. The dollar's dominance, too, hangs in the balance, with Carney's digital currency dream threatening to upend America's financial stranglehold. This isn't a temporary storm. It's a tectonic shift toward a multipolar world where cooperation trumps coercion. The U.S. can either adapt, swallowing pride to rebuild bridges, or fade into a self-inflicted decline, watching as the global order it once shaped slips through its fingers. The clock's ticking and the stakes couldn't be higher.